Hello, I'm Jorge Herreria. Today is March 31st, 2019. Here's my view in the market. Last week, I was expecting to have a pullback, and that pullback was expected to be close here to the 200 moving average. And well, I didn't get it. And the market, well, where am I looking at right now? Right now, I'm sensing I'm 50% bull, 50% bearish, and I walk you through the, the details why I'm in that position. Pretty much in a very difficult situation. So at this point, I'm not planning to open positions on the S&P 500s or the Qs, which I've been trading. And I'll show you my buy points and my sell points along the conversation. Okay, let me get rid of the SAP, the Fibonacci retracement. Well, before I do that, notice that the 0.786 line, this horizontal line, it is matching the 200 moving average, which is this gray area, and is matching as well the 50 simple moving average, and as well the bottom of the Bollinger Band. So there's a lot of crossing over here on the area of 2750, which, by the way, that is if the market pulls down to that area for me and then starts bouncing up, for me that will be a buy point right there. Okay, I'm gonna get rid of the Fibonacci so we get less lines. Okay, other things that I'm looking at is the market continues to trade in the top of the box, which is a positive indicator. And looks like the market on the next days wants to go up to the top of the Bollinger Band, and notice the top of the Bollinger Band is coinciding with the top that we have a few 2 weeks ago. So for me, if it comes to the top of the Bollinger Band, probably that will it will be my short entry point. Yes, I'm suspecting the market will come up and then start rolling down. So on the positive side is yeah, the market looks like it wants to continue to go up. Another positive side is that the 21 exponential moving average it continues to be support on the index, and the 8 exponential moving average, which is the green line, continues to be above the 21 exponential moving average, which is a positive thing. As a positive as well, I mentioned it, the market continues to be around the top of this box area, this trading area, which I consider that as a positive sign. As well, it is not far from the 200 moving average. If we measure from the 200 moving average to the close, it is 2.6%. So it is not far, it is not close. If we were around 5%, then I would say, yeah, we're a little far, we're due for a pullback. By the way, that area, it is a target, the 2900, it is a target area, but I don't expect it to happen this week. And you know, the market is made to fool the masses, so I will not be surprised that I said, you know, touching the Bollinger Band, I'll start in my short, but I'll be selling off, and in a 1% above the Bollinger Band, I will cut my loss short and probably flip myself to a bull position and try to get again to this 2900, and then here on the 2900, I will start my short position. So that's if the market continues to be bullish. Also, another positive that, well, this week it didn't perform very well, but the vigor is still above zero, which is positive. It's decelerating, but it's still above zero, and that's why, you know, it's part of the 50-50. It's like, yeah, still above zero, but decelerating. Another aspect, unfortunately, this chart doesn't show it, but this week trading volume, which it was, you know, 4 days of consolidation here and then breakout, everything was in low volume, including the breakout. And the negative sides, and that's what I'm 50-50, it is on the sectors. And allow me to jump into that one right away. The sectors that I'm seeing, okay, the area, so that's the S&P 500. I'm going to put it in an area. So whatever is below the area, it is underperforming the S&P 500, starting on, oh, it's doing uh, February 28. Let me do 1 month. In this month, what I'm seeing, the number one sector performing is the green one, which is the real estate. And that's usually considered as a defensive sector. So that's number one. Number two, it is technology, which is a growth sector, which is it is fine. And number third, in the third place for the month, is XLP, staples. So we have staples and real estate. Real estate number one, staples are number three. And this one is the consumer discretionary. See how is pointing down, whether the others are pointing up. That's the XLY. It's outperforming the S&P 500, but it's like losing steam. And the red line, it is utilities, which is starting to outperform the S&P 500 for the month. So that's the very connotation that I'm having. Is I'm seeing a lot of defensive sectors outperforming the S&P 500 for this month. Another aspect, let me go back to my S&P. It is that we are seems to be in a kind of fourth stage wave, if you want to call it, on the S&P 500. Sorry for that. I meant to delete this one. If we look over here, this is first stage, comes second stage, third stage over here, and this is the fourth stage. And now the market is struggling to break out the fourth stage. So that's a negative connotation. Another negative connotation, sort of speak for initiating position, is that we are in the Bollinger Band. From here to here, we are 3/4 above. So that's for starting positions. And another, believe it or not, that is on the negative side, is this 50-day simple moving average is crossing above the 200 moving average. That for the short-term future, it is a negative sign. So many guys consider that as a long-term bullish sign, and I agree. Long-term is a bullish sign, but for the short term, it is a bearish sign. And what I mean with that, this one might push the market to go to the top of the Bollinger Band, and then the market will get a small squeeze. My ideal trading situation will be if the market pulls down to the line of the 200 moving average or 50 moving average, which they're going to be very close to each other, and then bounces from that. That will be a very, for me, very healthy to the market, and then it starts coming, doing a rally to hit the 2900 target area that I have. Okay, so that was on the S&P 500. Let's take a quick look on the QQQ, which is in a similar situation as the S&P 500, and I'm 50-50 bullish. One caveat on the Qs is that my target area is a 182.40, and right now we are very close to it. If we measure how far are from the 200 moving average, we are at almost 7%. When the market reaches 7.5%, usually it tends to pull down. And actually, I'm measuring from the 200. That 7.5% is from the 50. So here's my 50. If I measure it right now, yeah, we are 7.5%. So I sense on the QQQs, the QQQ will struggle to reach the target or come up to the top of the Bollinger Band. And again, why is that? Look at the sectors that are going up. Staples, utilities, real estate. None of them are a strong value on the QQQ. So technology seems to be going to start lagging, and those defensive sectors that they have representation in the S&P 500 will continue to move up. Dun, 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 dun. And also the 61.8 Fibonacci, this line, it is on the positives. It is matching the 200 and the 50% moving average. So here for the QQQs, my trading plan is if it pulls down to the 200 moving average and then bounces from there, I'll be buying my probably the TQQQ triple leverage, and my target will be the 182.40. All right. A little bit on the small caps. What I'm seeing is the market is not willing to risk too much money. One on the bullish side on the small caps is that the lines, the 50 moving average, the 8 exponential moving average, and the 21 exponential moving average, all of them are converging in one point. So they're getting squeezed together. And usually that comes as key point of decision. Meaning, if the market, if small caps starts going up, it's gonna go up very strong. Most likely, it's gonna hit the target of 160 over here, which is sort of this high, or it will come down, and I suspect that it will come down to this dotted line. It will retest this downtrend that we have in the past. I know for some technicians that's no longer the case, but I sense it's going to come down somewhere here to this point. If you see horizontally this 146, it is the bottom of this area. So I sense the small caps has higher possibilities to come down than going up. And as well, notice how the Bollinger Bands, they continue to point down, and the vigor on the small caps is still below zero. So there's not enough power to push the index higher. All right. So with that, I already showed you the index. Oh, okay. Let's take a look of the percent of stocks above the 50 moving average, which is the candlesticks. It's still in a healthy position, 52%. We have a significant drop last 2 weeks ago, and this week was pretty much sideways. On the 200 moving average, which is the green line, is still above the 40%. That means on the long term, we're still in a bullish trend. So not much information, not much negative connotations here. It is more positive than negative. And one last indicator, I see so many, but this one got my attention. It is the Nasdaq Advanced Decline volume, is the one that has taken the 1000 range. It is on the negative side. You know, a few weeks ago, 3 weeks ago, the big one, the one that took the 1000 was on the positive side and coincided with this bottom, and we have this little rally. So now the closest one, it is on the negative side, so the market is struggling to continue to go up. Alrighty, hopefully that helps you, and I would love to hear your comments if you agree or disagree with me. Talk to you soon.